Imagine waking up one day knowing that your money is working for you, steadily growing and building your wealth while you go about your daily life. Sounds like a dream, right? Well, that's the power of a well-crafted investment portfolio. As Warren Buffett famously said, "Do not save what is left after spending, but spend what is left after saving." This mindset shift is the first step towards financial freedom and security. Step 1. Determine your financial goals. Before you start picking stocks or mutual funds, it's crucial to have a clear understanding of your financial goals. Are you saving for retirement, a down payment on a house, or perhaps your child's education? Your goals will shape your investment strategy, including the types of assets you choose and your time horizon. Take some time to write down your short-term and long-term financial goals. This will serve as your roadmap, guiding your investment decisions and helping you stay focused. Step 2. Assess your risk tolerance. Investing always involves some level of risk, and understanding your risk tolerance is key to building a portfolio you can live with. Risk tolerance refers to how comfortable you are with the ups and downs of the market. As Peter Lynch once said, know what you own and know why you own it. If you're someone who loses sleep over a 10% drop in your investment value, you might want to stick to more conservative investments like bonds or blue chip stocks. On the other hand, if you're okay with riding out the volatility for potentially higher returns, you might consider growth stocks or other high-risk, high-reward investments. Step 3. Diversify your investments. One of the most critical aspects of a successful investment portfolio is diversification. This means spreading your investments across different asset classes to reduce risk. As the old saying goes, don't put all your eggs in one basket. Warren Buffett also advises diversification is a protection against ignorance. It makes little sense if you know what you are doing. A diversified portfolio typically includes a mix of stocks, bonds, and other assets like real estate or commodities. By diversifying, you can protect your portfolio from significant losses if one investment performs poorly. Step 4. Choose your assets. Now that you have a clear understanding of your goals and risk tolerance, it's time to choose your assets. Here are a few common types of investments. Stocks represent ownership in a company and offer the potential for high returns. Bonds, loans you give to companies or governments in exchange for periodic interest payments. Mutual funds, pooled funds managed by professionals, offering instant diversification. ETFs, exchange-traded funds. Similar to mutual funds but traded like stocks, ETFs offer flexibility and diversification. Real estate, physical properties or REITs. Real estate investment trusts provide income and potential appreciation. Commodities, physical goods like gold, oil, or agricultural products that can hedge against inflation. Each asset class has its own risk and return characteristics, so choose a mix that aligns with your financial goals and risk tolerance. Step 5. Regularly review and rebalance. Creating an investment portfolio isn't a one-time task. Markets change, and so do your financial goals and risk tolerance. Regularly reviewing and rebalancing your portfolio ensures that it stays aligned with your objectives. Rebalancing involves adjusting your asset allocation back to your desired mix. For example, if your target is 60% stocks and 40% bonds, but a stock market rally has pushed your allocation to 70% stocks and 30% bonds, you would sell some stocks and buy bonds to get back to your original allocation. Step 6. Stay informed, and patient investing is a long-term game. Stay informed about market trends and economic conditions, but don't let short-term volatility sway your decisions. Patience is your best friend in investing. As Warren Buffett puts it, the stock market is designed to transfer money from the active to the patient. Building an investment portfolio is like planting a tree. It takes time, care, and patience to grow, but once it does, it can provide shade and fruit for years to come. Remember, the goal is not just to save money, but to make your money work for you. Start today, stay disciplined, and let the power of compounding do its magic. In the words of John C. Bogle, the founder of Vanguard Group, the greatest enemy of a good plan is the dream of a perfect plan. So don't wait for the perfect moment or the perfect market conditions. Start now with what you have and watch your financial future unfold. By following these steps, you'll be well on your way to creating a robust and diversified investment portfolio. Happy investing! Raise your IQ with cutting-edge info, insights, and analysis. Visit and subscribe for free at the link below.